Let's turn our attention now to the local front, because we've got a lot of economic data out this week, and of course we've got that key MPC rate decision on Tuesday, given that Thursday is a public holiday here in South Africa. Let's start off with today's news. We're going to be seeing the retail sales being released, and of course we are expecting a little bit of a recovery there.
We're hoping so, yes. The last number down 6.7 for June, so this will be the July number. It's come out with a bit of a lag compared to some of the other economic indicators. But I think we're hoping that all of the interest rate cuts that we've seen so far are starting to work their way through into households and consumers, and that we'll start seeing some of that spending picking up. That number's been negative for, I think, every month this year except for January. And, signs of a little recovery there. I think more on the month-on-month numbers to see that recovery more than the year-on-year numbers.
Okay, we're contracting by 6.7% on the retail sales front. When do you expect to go into positive territory?
Ooh, it might only be very late in the year. I think we've still got some way to go. I think households are still in a distressed situation, and we'll see what we get from the MPC this week. Maybe a little more relief. But I think it's still going to take time. People are still, working down their debt rather than spending and consuming on durables.
Of course, there's different trends emerging on that front, but taking a look at the MPC rate decision, we had the South African Reserve Bank AGM on, I think it was Thursday. Just taking a look at some of the comments that came out of that meeting, do you think that perhaps they signal that we could be seeing another rate cut?
Well, the signals from the Reserve Bank have been very mixed, and I think that's what makes this decision, a little tough to decide. I think the Absa Capital view is that we'll still see 50 basis points cut, but really is in the balance. The one MPC meeting, they're all concerned about inflation, as they have historically been, and then they start talking about growth at the next one. So it has been a bit mixed. I think this meeting, we're going to get the third quarter Bureau for Economic Research inflation expectation survey. So maybe we'll come back to inflation expectations, where we're going with that, and more of a focus on inflation. And we should be getting closer to the range with the CPI. So even though we are close, I think we have already seen, the 500 basis points. For me, it's probably enough. I think another 50 basis points is not going to do too much here or there, but we could still get it.
You mentioned that there's a big focus on growth versus inflation at this stage, but now the Rand has come into this as well, because we also heard the South African Reserve Bank saying they're going to be keeping a close eye on it. Now, some of the analysts I've spoken to, they say if we do see a rate cut this week, this could actually negatively impact the Rand, which is essentially what analysts have been looking for, because a strong Rand at these levels obviously impacts resource companies negatively, and of course it's going to impact the manufacturers going forward.
Yeah, we've seen the monetary authorities and the fiscal authorities coming out and saying that the Rand looks to be too strong, but it looks like it could stay at stronger levels for some time. So, another rate cut might lead into a weaker currency, or it could be seen as promoting growth and attract more foreign investment and more speculative cash, and that could keep the Rand even firmer. So it's a bit of a toss-up.
Well, the Rand, as you can see, 746 at this stage. I mean, where would you put it at fair value?
I think around that 750 level. That's probably where we would look for it to be maintained over the next 6 months or so.
That's very strong levels.
It is a strong level, but there's a lot of positives, and it doesn't look like the current account's going to run away anytime soon. I think we're still seeing a lot of positive interest from foreigners. The risk appetite for emerging market debt's still quite strong. So there are a number of positives that could keep the Rand here.
Right, CPI at this stage is at 6.7%, very close to that target range. And of course, analysts are expecting it to contract to about 6.3%. Of course, 0.3% away from the 3 to 6% target band. When do you expect that we will head into that target band? And some say we're only going to dip into it briefly and we won't be able to maintain.
Yes, it doesn't look to be sustainable, I think, even till the third quarter of next year, third quarter, and that's the Reserve Bank's time horizon as well. Very close there now, and I think we're benefiting from some of the services components that are coming down. That's been the really sticky part. We benefited from the food and the fuel inflation that's come off, but the services have been quite sticky. So that could still be fairly sticky, but I think it's easing up a little. That's getting us close to the top of the range, but I don't think we're going to go into the range in a sustainable way probably till late next year.
Right, till late next year, and of course growth is expected to recover quite a bit until then. Do you think that we could see some interest rate hikes going forward if we do not stay into that target band? Or do you think now that we're going to be having a new Reserve Bank governor, that target band might actually be relooked?
Well, the band is up to the fiscal authorities and Treasury to decide on that. So I don't think the new chairman or the new governor will have much input on that. It'll be interesting to see the policy and then the way they talk around the range going forward. But I think we're only going to see that the CPI into the range much later next year.
Right, Craig, just taking a look now at the equity markets, and of course all the economic front really has an impact on equities going forward because we've priced in so much already.
We have, yes, it's done very well. So.
Do you think we've priced in too much? Are you expecting a pullback?
Well, the PE ratio of the market's well over 14 now, which is well above its 10-year mean.
In March it was just very close to 8, if I'm not mistaken.
So we were pricing in disaster then, and I think we've priced in a lot of the good news as you've said now. Probably close to fair value, so it could go a little bit more. But I would think over the next little while, probably more likely to come back a bit than advance a bit more.